Here's an example of what things can look like as you're heading into an earnings and looking at implied volatility. So here's NVDA, which tends to have a pretty high implied volatility normally. But you can see here the earnings were going to be, this is a Thursday at the close going in, and the earnings are going to be announced after the close. So it's 1 day to expiration. So going into this earnings announcement on the 13th of Thursday, the implied volatility for NVIDIA was over 114% right here. Okay, so huge implied volatility. Now, normally you can see it's down around the 40 level implied volatility, but it really spiked, and that's like 2-3 times up what is normal. So what this is telling you is the market is saying that there's potential for a big move either up or down. And so it's showing you right here, this thinkorswim, it'll show you the expected move, and right there, that's $17 up or down. So the market over just this 1 day period from Thursday to Friday's expiration is saying the potential is that NVIDIA could go from 270, where it's closing out the day of the earnings announcement. In 1 day, it could go up $17. That's just one standard deviation, or it could go down 17. So huge potential range up or down. So this is what we want to take advantage of, that increased implied volatility, and take advantage of it for that volatility crush, where it just eventually, after the uncertainty's out, it just collapses, or a potential price spike. So let's take a look at what happened to NVIDIA the next day. So here it is the day of the announcement, so after the close, and here it is the next day on the Friday. So it has a huge volatility crush. So you can see it went from 114% implied volatility. Then the next day, after the earnings release and all the uncertainties out, collapsed back down to around that normal implied volatility of about 35. Not only did the volatility collapse, but it also had a big price spike. So it went up 7.5%. So these are the kind of things that happen that you can really take advantage of. So here it was at the earnings announcement. Then after the announcement the next day, it had spiked up 7.5% in implied volatility. You can see here it collapsed down. Now, as for this kind of reason, it's essential that we put together a list of stocks to monitor closely, and due to the fact that they may not all give us the same kind of trading opportunity. So remember, the goal is to take advantage of this kind of temporary rise in the volatility levels, as well as we want to look at past earnings performance to see if there's any consistent patterns to a specific stock. So we want to see what is the typical norm for that specific stock. So that's where we can make an earnings watch list to look at going into earnings and have a better, higher probability of different stocks to trade. So this is, it's all based on the probabilities, and the probabilities of certain patterns happening over and over again.